Good evening. This is ENCA Moneyline, your money guide. My name is Sikim Gabadeli. Coming up on the show tonight. South Africa's banks are safe and sound. That's the word from the Reserve Bank, but global issues threaten to derail the country's growth. Transnet loses 25% of its profit but stands firm as it continues to invest in its future. Chief Executive Brian Molefe joins us in studio tonight. And with deaths reported on the channel almost every day, how soon should you be getting a last will and testament? We guide you through all of this and more. But first, here's what's coming up on the Money Guide. Well, motorists could be in for a pleasant surprise. Analysts are now predicting that the petrol price could drop by as much as 44 cents a litre. They're also expecting diesel to fall by around 56 cents. Illuminating paraffin could also go down, dropping 49 cents a litre. International oil prices have plummeted over the past month, while the rand has strengthened. Both factors are good news for drivers, as they usually translate into cheaper fuel. Government will announce the new prices on Friday. They'll come into effect next Wednesday. South Africa's banking sector is stable and sound. That's according to the Reserve Bank's Financial Stability Review, which was released today. But the central bank says the vulnerability of consumers is worrying.
Despite the recent collapse of African Bank and the struggle by global banks to meet Basel III requirements of holding enough cash, the South African Reserve Bank says investors need not worry about the local banking system.
Our banks remain well capitalized. The capital adequacy levels is about 14.6% compared to the statutory minimum capital levels of 10%. And by any stretch of the imagination, they remain well capitalized. And one of the conclusions of this report, obviously we look at a number of risk factors, is that the financial system in South Africa remains sound.
But there are some issues keeping the Bank of Last Resort on its toes. It's concerned about the effects of the increase in the cost of living on the stability of consumer spending. While a wider current account deficit and high unemployment are likely to fuel more labor unrest in the economy. Despite the weak local economic growth and African Bank's curatorship, the South African Reserve Bank maintains that South Africa's banking sector remains strong and capable of dealing with any disruptions. But the potential rise in interest rates in the United States has brought about the potential of diminished investments hitting our shores in the near future.
Obviously, what one needs to consider is obviously there's a correlation between US interest rates and global interest rates, right? But I think one of the issues that we have emphasized in previous statements is that it is one of the input factors that we have to consider, but we also have to look at domestic conditions and we have to look at the inflation path.
Meanwhile, unsecured lending has risen to 490 billion rand in the first half of the year, although the growth remains lower when compared to previous terms. The bank's confidence in the country's financial system is stronger than ever, but it warns that global and local uncertainties need to be monitored closely.
Transnet is hunting for more assets. The country's rail and ports operator admitted this after seeing profits fall by 25%. Transnet had to write down the current value of old equipment, bringing impairments to a total of 719 million rand. This is more than double the figure in the first 6 months of last year. Now, after-tax profit dropped to 2.1 billion rand in the 6 months to September. Interest charges went into double digits as a result of increased borrowing. The company says it's not concerned with the decline in profit, as it is in a capital acquisition phase. Transnet is into its second year of a 312 billion rand program to improve rail links and port capacity. The parastatal last month signed a 10-year 24 billion rand deal with BHP Billiton to transport coal to the country's ports for export. To unpack these results and, of course, Transnet's strategy, we're joined by Chief Executive of Transnet, Brian Molefe. Brian, thanks for your time this evening. So that was quite a big increase that we saw in financing costs, but I suppose when you are in the middle of a capital expenditure program, you expect to borrow more, and in this current cycle of the credit cycle, you can't help what you're going to be charged.
Yes, of course, because the finance costs had to go up because of the stock of debt going up 10%. In March, our debt, the debt in our books was 90 billion, and now it's 99 billion. So it's the additional debt that is increasing the finance costs.
Can you carry it? Are you happy with your gearing at the moment?
Our gearing is 46.5%, and we're quite comfortable with that, and that is in line with expectations. You must remember that as the debt increases, and we're also increasing assets, the effect on gearing is almost neutralized.
All right, let's talk a little bit then about the capital expenditure program. I mentioned it's literally, I think it's the biggest thing that we've got going in South Africa in terms of infrastructure at the moment. And you've had some great successes with moving some of the freight off our roads onto rail. Just how significant has that shift
We've
been?
had 14% growth on containers and automotive, which is cars and containers on the shifting from road to rail. We've had significant improvements on coal that is being transported, especially Eskom coal that is being transported to the Eskom power plants, shifting from trucks to trains. And that was very easy because we just contracted with Eskom, was our sister company. And we have big successes on road to rail, but the road to rail migration is not complete, and there is still a lot of work to be done.
Okay. And you are, in the current spending cycle, you're focusing specifically on rail. What about the ports?
We, as you know, went through a phase of buying new cranes for the Port of Durban, for the Port of Mocha, as well as the Port of Cape Town. We're buying Tipler equipment in Saldanha. We're bringing in new equipment in the Port of Richards Bay. So we're also focusing on the ports. We're also deepening berths in Durban and in Mocha. In fact, we're even doing maintenance dredging in Maputo. So we're quite busy in the ports as well.
And what's the progress on the building of the locomotives?
The locomotives are being built, and we have received about 26 locomotives from the program to buy 95 locomotives. The 95 locomotives, electric locomotives, will be received by the end of this year. The 1,064 locomotives will be in operation in 3 years' time, by 2018.
And the bulk of them are being built in South Africa?
The bulk of them are being built at our facilities in Kudispoort, outside Pretoria, and in Durban.
Let's talk a little bit about your focus on local suppliers, because I understand that you're going to be appointing someone in the CFO's office to go through those contracts to make sure that the procurement is coming through from local suppliers.
Yes, there is the whole idea that although we're buying locomotives from original equipment manufacturers who are outside the country, the locomotives will be manufactured in South Africa with local labor, and we are inviting local engineering firms to come up with parts that they can supply in the building of the locomotives, so that we create jobs in South Africa, not just at Transnet, but also develop industries here in South Africa.
I mentioned the agreement that you signed with BHP Billiton. Will you be getting more of your customers on board on similar deals?
The rest of the industry is about 28 other players, and we will be signing contracts with them by the end of November.
And that's in the pipeline.
So that's in the pipeline, and I think we'll just make one big announcement when all the contracts have been signed.
All right. Part of your capital expenditure amount, the 312 billion rand that we were talking about, you're setting aside some for research and development, because one of the things that you want to do is to, I suppose, bring in more and more engineers into the sector, so we don't have to keep talking about a skills shortage.
Indeed. Yes, we set aside 1 billion rand for research and development. We have, for the first time, not invited engineers to apply for jobs. We went to the universities and got the A students and approached them and asked them to join and begged them to join Transnet, and they did. We have 106 engineers that have been employed in the last 2 years, and by this number will increase to 150 by March, and it will be 600 in about 4 years' time. So we set aside the billion rand, and their mandate really is to do research and development. We're signing cooperation agreements with the Chinese, with the Germans, and with General Electric in the United States, because they have far more advanced programs than we do. We went recently to the United States, to Germany, and to China to see their programs and to see the areas of cooperation on research and development.
Looking at your balance sheet now, looking at the plans that you have in place for things that you want to do over the next decade, are you comfortable that in the next year or two you're not going to be turning around to us taxpayers and asking us to fund you?
No, not at all. I don't think that we'll be asking for money from the fiscus for a while. We're quite comfortable with revenue generated from operations. I mean, although you say that the net income after tax declined by about 25%, those were non-cash items. It was depreciation and the write-offs of certain assets. So, yes, that was non-cash. Cash generated from operation in the period grew by about 68%.
Okay. All right. Well, it's good to hear. That is the Transnet CEO, Brian Molefe. Now, President Michael Sata came into power in August of 2011, promising to improve Zambia's economy, stop wasteful state spending, and encourage foreign investment. Despite a valiant effort, it was a promise he struggled to keep.
In 2012, the Sata administration launched a probe into all foreign deals signed under the previous government. It alleged many of them were illegal and that the state assets had been sold at a fraction of their value. The outcomes was that the state reversed the sale of the national telecoms company Zamtel, which had been sold at 75% to Libya's LAP network. The deal was worth more than $200 million and was found to be illegal. A similar probe was conducted into the sale of Zambia's national commercial bank to Netherlands lender Rabobank. The state also temporarily halted mining activity, which accounts for more than 80% of the country's export earnings. It targeted foreign investors, particularly Chinese-owned companies. All exports were put on hold during investigations into awarding of mining concessions. Soon after this, the government doubled its taxation on foreign-owned mines. Sata defended the 6% royalties the state claimed, alleging Zambia's previous tax structure was overly favorable to foreign investors. However, Zambia's most notable economic achievement under Sata's leadership was the raising of 2 euro bonds. In October 2012, the country raised $750 million and another billion for infrastructure development programs in April this year. There were other positives. Under Sata, foreign direct investment climbed above $3 billion. GDP rose to 7.3%, inflation eased, and unemployment levels dropped. Yet it's unclear if these gains can be sustained, as Zambia is still dependent on copper prices, which form the backbone of the economy. Kutaza Madoti, Johannesburg.
Now, the passing of a loved one is never easy, and the last will and testament is one of the most important things one can leave his or her family and loved ones. When we return, ENCA Moneyline will unpack how to write up a will. Stay with us.